Good weekend, all. Ira Epstein, and here we are on the weekend of April 26th, Saturday, and it is 2025. And we look at the markets, and you can see in the stock market, you finished off the week mixed, didn't really go anywhere. You know, I've been calling this a bear market rally into the 18-day average of closes on the daily chart. Now we're going to look at the weekly charts and get a good idea what they look like. Gold market down again fairly hard. Silver market down, but obviously gold, which had advanced on silver so dramatically, when you go dollar for dollar, it's losing some to it, but it's still more favorable than gold. A little bit lower in the copper market, which is, you know, fighting a battle now to stay near the $5 level. Platinum market on the weekly charts isn't looking all that great. The dollar index is stable at the 99 level, and I don't know that you can call it more than that. When we looked at the energy markets, okay, a little bit of a gain, but when we see the weekly charts, is it really going to be good? And one of the things that I keep going through my head, assuming President Trump gets successful with the Russian war, and he did meet with President Zelensky of Ukraine as he attended the funeral of Pope John today. Assuming that happens, you know that'll bring more Russian oil back to the real market. Assuming that he is able to get something done with Iran, who Steve Witkoff met again with, and they have a fourth meeting set for next week now. They always say that they're making breakthroughs. We'll find out if they're making breakthroughs. But if Iran and Russia did somehow make peace, what would that do to more production of oil actually on the marketplace? Well, in one way, it certainly opens it up to other people. And we know that there have been curtailments from the U.S. pressures. So it just gets interesting as to what that would be, because at the same identical time, OPEC is in the wings wanting to put more oil on the market to grab back market share. Just keep your eye on U.S. oil at $60. Under it is where you'll start seeing, from everything I read, the reductions in it. In the grain market, this is the typical, hey, this is the planting season. Where are we going? How's the weather looking? How much is getting into the ground? Blah, blah, blah. And we know grain is in play for any of the tariff deals that the president wants to make from countries that can buy U.S. grain. That is definitively on the table. And the oil market has been taking off recently. While it got up to 51, that was a new high on this move. It did see profit taking finally by the end of the day, but that was a new high for this move. All right, let's go, if we could, now to the charts. And what we're going to do is these are going to be typically weekly charts, but on the S&P, I'll start off with a monthly chart. And what the market's been doing is pulling back down. And for the month, we're down 1.83%. We've been adding on the break. And I'm looking for long-term support to come in at the 54.75 level. Now, the big report of the week will be at the end of the week. I think it's May 2nd. When we're going to get the jobs data report. That, to me, will be the big number of the week. They're looking for 135,000 new jobs on a Reuters survey. We'll see if that is the case or not. But the support here, only 75 points away. It looked so far away a while back. When we look at a weekly area chart of closes, the market was up nearly 5% for the week. So it made back a nice amount from the amount that it's recently lost. That's not a surprise to me. I've been telling you that I thought that April 7th washout low on the daily chart certainly looks like a trade bottom low. That fits in right over here, by the way. So now we have a market that's been picking up, and when you put the swing line study on the chart, you have higher lows and higher highs. Where's the resistance? Up here, near the 5,800 level. So we'll see if it can get there. There's a lot of questions about that. But that is the zone that on my charts that it could go to. That number will fall a little bit because when we reopen, remember, you're going to drop some data from back here on the 18-week. So you're replacing it with data that's lower. It'll drop the number down is how the average will work. When we take a look at Bollinger Bands, while the market had that one real move down, remember when the bond market had come unglued? That put it down here. It snapped back the same week and closed right up here, much higher than that. And the market has done a good job of paying attention to the 100-week average and the Bollinger Band. So on a weekly chart so far, as we look at all this, I can make an argument that the market is what? You've got short covering rally, again, with higher lows, higher high pattern. The resistance is the 5,800 level. The market had been oversold and it's lifting up, and support is back down here at the 5,206 level. I think that's the way to sum that up. The Dow isn't far different. Take a look. Again, you had that one plunge when the bond market came unglued the week of April 7th. The market rallied back like it did in the S&P, got over the Bollinger Bands. It has developed a pattern of higher lows, right? Well, but it's got lower highs. So while I had that arrow there for you, that arrow doesn't belong there. It belongs here pointing down, and there pointing down. You really have to take out in this market 41,010 level in order to get the pattern going with higher lows, higher highs. Just my mistake. I looked at it and I said, you know, I think I'll leave it and explain it, and that way you can get an idea about it in case you wanted to catch me on it. In the NASDAQ, we do have the higher lows, and this week with a higher high. Again, they all three did the same thing, the same break off the bonds, the same move to negate it during that week. The markets have come up and they've been back in the Bollinger Bands, but all I can call them at this point are bear market rallies because they're all still have a target of the 18-week average of closes, which is well above the market. When we come to the Russell, it does fit in with that. Higher lows, higher highs, but different moving averages as its target. Now, you've got the 200-week at the 2010 and the 18-week. So while this is definitely a bear market rally time, what would be a problem for all these markets? In terms of my parlance as a chartist, if you take out this week's lows, this coming week, you have a serious issue in the market, probably going back to the Bollinger Bands in all of those markets. In the DAX, we had that one big correction in the market, and it's regrouped. It is over and staying over the first challenges, and I think you'd agree with me, of the 18-week average. Now, you did close 1 week under it back here. You had that follow-through and came right back. This is so classic, what I teach in my charting course, how markets like to fight at that 18-week or 18-day moving average of closes. So I pay attention to that. I think the market gets somewhat limited at the 42, 43 level, and support is in the market now at 37.45. It's really not a good trading vehicle right here. It was back in these points when it had the embedded reading and it would just kept hitting the band and letting you come in on the breaks. But right here, I don't see that. Then in the bond market, we've had the market stay under the 18-week average 2 weeks in a row, and now it's stuck its head back over it. And that's important because now you've taken some of the selling pressure off the market. Do I see a trend? Absolutely not. I see a market with a higher high and a lower low. I wouldn't be surprised if all you do is get this type of trade in the market as we get ready for the next jobs report and what that might mean to the marketplace. In the 10-year bond, it's a different story. The market challenged and has respected the 18-week average of closes and the 100-week. There's no trade pattern from my perspective as you have a lower low, higher high, but the bias in the market has stayed to the bull side. Certainly the same thing can be said of the eurocurrency. Markets come all the way up here. We're getting ready for another European Central Bank announcement. I happen to think they're going to lean into the 25-point rate cut. We will see if I'm right or wrong. You've been running the upper Bollinger Band. You're not embedded. You're overbought. You could embed. How many weeks do we have over the 80 level? Well, we certainly had this week. What about last week? Definitively, what about the week before? No. So this week is the week that could set that up. I'd like to see what it does on a weekly basis. I'm certainly in the bull camp, but buying against the Bollinger Band, I rarely say to do that, if ever. The Canadian dollar, you now have 3 weeks in a row of being over the band going into all important elections. I saw that the spread between the conservatives and liberals are sitting at about 3 points, which I guess is with an error number. So we'll see what happens there. It appears that the young people like the conservatives, the elderly people in the country, like the liberals. We will see if Mark Carney, who has not been a politician, he's really been more of a person in the banking sectors in the UK and England, can win this one or not. His party is in the lead. The Liberals are at this point in the lead. We will see how this goes. The 100-week average is up here. Obviously, there's a lot at stake, so keep your eye on it. But would I tell you to buy over a Bollinger Band? Not going to happen. Japanese yen. Big move, has run the Bollinger Band all the way up. When you keep hitting a Bollinger Band, while I'm not saying to buy it, do you think that's a sign of weakness? Absolutely not. It's a sign of strength. And that's what you've been getting in these markets. Now, the president keeps saying they're getting closer and closer with the deal out of Japan. Yet when I go to the Japanese press and read English papers there, I'm not seeing that. I'm seeing that they're still very, very far away. There's only so far you're going to be able to push them. I'm going to repeat. I think the best deal that can be struck with the least amount of problem to at least get letters of understanding might be the UK. Just one of my thoughts on it. And that's another thing I have in mind. Why does the president have to have the deal? What's wrong with letters of understanding, memorandums, some MOMs, letter of understanding, whichever way? That might tame the market too. I'd like them to think that through. The market wants to see, the U.S. market and the world markets want to see that the president is capable of making a deal by give and take, not just his demands. You can see how you did close lower in that market. Bitcoin, you've heard me say that I think Bitcoin has the worst behind it. And at this point, given the current state of fundamentals, and that's so important, current state, unless this market slips back under this level, the 74,635, I do think that. And I think that I gave you a target near the 100,000 level. I do think it can return back up into that general zone. Is there a buy signal here? No, but you ended all the sell signals, and that's where I came with that from. You haven't really done anything in the crude oil. You're just sort of wavering here. You know, at one point, you do remember when Russia in 2022 and Saudi Arabia went at it, oil prices, which people didn't realize could go to zero, went beyond zero. You had to pay for the storage of the oil. Where could you get a tanker? So it went crazy, obviously, from that. People didn't believe it. I remember having a great client, a very good stock trader, that didn't believe that interest rates in the U.S. could go under zero. And I kept telling him, there's nothing that says it can't. And we fought about it for a long time. And it took, obviously, the COVID and other things to prove the case. But it did happen. And it happened to a lot of, all over America, not just America, by the way. All right. When you look here, lower highs, lower lows, what do we have? We have a bear market. So in Brent, any rallies, especially between here and the 18-week average, which is a long way off, that's $7, it has the bearish influence of the market all over it. The same at this point in time, when I'm doing this today, is true of the WTI. And when I look at gasoline, it's finally stuck its head up a little bit. Is it going to be able to build right here against the 18-week average of closes to give the daily chart enough room to say, okay, the spring, summer driving season, we should add more premium into the market? It's the beginning of at least a heads up that that could be underway. I want to remind you that I talk this and a lot more in my research. I don't know if you're aware of it, but twice a day I send out Monday through Thursday market research along with special updates. So if I see something in the market that I think should be done, just because I put out a morning subscriber video for my people, does not mean that I don't pick up and say, let's change that order and go this way. I do those. Also included are the special reports like you saw me recently do in the dollar index, where I thought maybe this fourth price count of the 98, we might look back and say that was it. If not, it's 88, and that spells a lot of doom in financial markets. That's why it would be happening. But I also talk to you daily, and I write in a way that I want 3 minutes of your time and no more than that. Why? That's all you have to say. Letters that are this long and sheets, what do they tell you? Do you really care what the fundamentals are? You want to get to the baseline. Buy here, sell there. What do I do? What's the stop? Why are you saying that? Show it to me in graphic form and give me some ideas, giving me ideas. That's what I do. Go to iraepstein.com. If you want to learn what I also do with Bollinger Bands, and that's why this has been up, I want to teach you. So you hear me say about my Bollinger Band course all the time. So I've got courses galore, some that teach you the charting. I've got courses that teach you the Bollinger Bands and my research that all come together. How do you get this? Why not go to iraepstein.com education? Any of the courses you buy do come with my research for a period of time. I'm Ira. You have yourself a great weekend. I'll catch up with you all come Monday morning and in the other videos that I'm yet to record. Take care.